As we get going today, I want to start with a few tools that we're going to be using. First tool is I got a quick poll question. And the question is just to kind of get a feel for who's on the call with us. You should see a poll that just got launched. It's asking you, is this your first time with us? No, I'm returning. Yes, it's my first time, etc. Go and respond. Now, make sure as you use the polling tool today that you hit that submit button. Just because you select something, it won't actually calculate it until you hit that submit button. So make sure you do that. Get a feel for who's with us. No worries. If this is your first time, welcome. Good to have you here. If you're coming back, thank you for returning. This is a program we do on a monthly basis as a way to help build the business acumen of our graduates of our program, but anybody who has an interest in how to listen to these earnings calls. How can I take the information from these earnings calls and use it in my own career? If it's my company, I might use it as I look at maybe I'm selling into a publicly traded company. I want to understand their business better. Or maybe you're just interested in your own portfolio. And as you look at the investment ideas or directions that you're focused on, being able to understand the company you're interested in selling into. That's kind of what we're looking at today. So it looks like as I share that results, it looks like, about half of you, a little bit more than half. So welcome. Good to have you here. Hopefully you'll come back. For our participants of our program, we encourage you to do at least 2 of these as a follow-on to the course to continue to build your capabilities on how to use the tools you're given in the course to assess a publicly traded company. That being said, if you've never been through our program, no worries. This is an open enrollment. Anybody can join us. Our goal is really to help individuals to truly understand how to take this information and use it in their careers, in their decision making, as they work with customers, etc., within their roles in their own organizations. Well, the second tool we're going to be using quite a bit is that chat box. So make sure you have that open. As we open that up, here's what I want you to do. Just make sure it's set to, it says send to, make sure it says everyone. Now, if you want to do a private chat, feel free to do that. But my recommendation for the most part, just send it to everybody so everybody can see kind of the communication conversation we get going. So my question as we get going, if you've been with us before, you'll remember my question is, where are you calling in from? Could be a city, could be a state, could be a country, could be a location in your home, as many of us are doing that hybrid model. Some of us are still kind of in lockdown at home, etc. My team and I are out of Salt Lake City, Utah, a little bit south of Salt Lake City, Utah. If you're familiar with Utah at all, we're actually in a place called Orem, Utah. Most people aren't as familiar with that unless you're familiar with this state. But Salt Lake City, Utah, our claim to fame is we had a great opportunity in 2002 to host the Winter Olympics. As this year we had a chance to see that in China, which was a great experience. Looks like we got people a lot of stateside. Oh, thank you, Boris from Germany. Good afternoon there. Thank you for joining us. Anybody else outside? Looks like most of us here. Well, welcome. It's good to have you. As Ginger said throughout today, as we walk through our program, we'll be using this tool as a communication tool. We have too many people on the call to be able to kind of unmute each other. So just please use that. We'll try and answer. I got my colleagues on the board. If I miss something, they'll help me try and answer as we go through. Now, the real goal of this is to introduce a tool that will help you to look at any company. Now, of course, this month, we have the great opportunity to look at a peer-to-peer services type company. It's actually the first one I've had a chance to do as part of our webinar, Uber Technologies. Now, when you hear peer-to-peer services, I want you to think of Uber. I want you to think of Airbnb. These companies where you're taking somebody has a resource and somebody has a need and they come together. Of course, Uber is a unique one. I was familiar with the Uber in my travels as a rideshare application. Now, of course, during the pandemic, things changed a lot and we started to see their delivery side of services. How many of you realize, though, they also do freight? Small to medium businesses, transportation of freight. Kind of an interesting company as we get a chance to look. So very excited to do that. But our goal today is to really help you understand how to use this tool that you'll get access as we jump into this at the end of our course today. We'll give you access to that. So let me go ahead and jump in to our What the CEO Needs You to Know earnings call lab, where we're going to talk about Uber Technologies as the focus here. So my question, I got a quick poll question. As I said, we'll be using that a little bit today. So my question is, when's the last time you listened to an earnings call? When's the last time you listened to an earnings call? Is that this year? No, Brent, it was last year. Boy, it's been a while. Hey, Brent, I've never had a chance to listen to an earnings call. Or you know what, Brent? I'd rather go to the dentist than to listen to these earnings calls. Now, these earnings calls happen on a quarterly basis. They're a great resource. I call them a hidden gem. What do I mean by that? It's something that's of great value, but many of us don't really use them that well. Or we go and engage with them and we don't have a framework. We don't have resources to kind of draw from that the key nuggets of things I need to do differently based upon my role. These are a great resource that happen. I want to share how to get the value out of them. So when's the last time you had a chance to listen to it? Go ahead and fill that out as we'll go ahead and close that here shortly. As I said, these are not required for companies to do. And by the way, not most publicly traded companies will take this opportunity. It's a chance for them to, they submit to the Security Exchange Commission their financial performance. They don't just want that data out. They want to be able to give their side of the story, so to speak. They want to kind of talk about where they're currently at. They want to talk about where they're going and how they're going to get there. They want to talk about whether or not they hit the goals and objective the market was expecting, et cetera. So it's a great chance for them to kind of communicate. Not only do publicly traded companies, but from time to time, you'll have privately held companies who will speak at conferences or who will have a press release. This information, these tools can be used absolutely to listen to an earnings call, but they can actually be used to listen to any executive communication. So as I look at it, when's the last time we listened to it? Majority of us, it's been in the last couple of years. For some of us, it's been a while, and about 10% of us have never had a chance to listen. Well, I hope my goal today is for that 10%. I want to create enough excitement, enough interest that you'll actually go and pick a company. If it's your own company that you work for, maybe it's one of your biggest customers, a company you sell into, or it may just be a company you're interested in from your own personal interest or investment strategies. I hope I give you enough value today that you will decide to use this as part of it. You absolutely will get tremendous value as you use this tool. That's definitely a guarantee I'll give you as we go through our program today. Well, you think about these calls, and I call them a hidden gem, a great resource. Interesting. Even with these calls, there's some sobering statistics that we have that I want to share with you. They're kind of interesting around earnings calls, information you get in earnings calls, et cetera. The first one is as you think about how well do employees truly understand their company strategy? This suggests that 95% of employees don't understand their company strategy. Now, you might say, Brent, that's way too high for our company. We're very kind of strategy focused as a group. We're very good at communicating it. We understand everybody's piece, et cetera. This was a stat that came from Harvard Business Review research they did pre-pandemic that found that about 95% of employees don't truly understand their company strategy. Here's kind of an interesting one. 90% of employees don't understand the key metrics and measures their executives are talking about. Ebitda, return on capital employed, free cash flow, these metrics that their executives talk about. And the chat box tell me, I agree with these metrics. No, they're a little too high. Boy, I think they should be higher, et cetera. As you think about how much of this communication that comes from these executives on a quarterly basis, do you think the average employee truly understands the key strategies of the business? Now, I'm not saying that an individual, what we find, Acumen Learning, we've been in business for 20 years. We had a chance to work with some of the best companies in the world, 30 of the Fortune 50. What we find is senior executives are doing everything they can to squeeze a dollar of the financial statements, create greater profitability, cash flow, et cetera. What we find is employees are functionally brilliant. What do I mean by that? You're very good at your role. You understand more about it than I will ever understand. That being said, we tend to kind of go through our careers with blinders on, very focused on my functional role. I'm a trainer. I'm looking at engagement, understanding of the topic, being able to apply the topic and make changes and results. How often do I step back and get that big picture perspective? How does that drive Acumen Learning success? How does that drive our customer success? Definitely, that's what this is all about. These earnings calls a chance on a quarterly basis to step back for a moment. Get the big picture. What is our company focused on? What are they trying to do? And with that information, what can I do to impact the business? As we look at the stats, I see some agreement. Seems high, but missed opportunities to educate employees. Pat's kind of describing, unsure about the percentage, but say the average employee does not understand as much as we should. Well, here's my experience. As you think about a senior leader, and we got this month we're doing Uber. It's Mr. Khosrowshahi. is their CEO and founder, founded in 2009. You got a technology platform that's really focused on the ability to kind of transport or movement between point A to point B. Three specific segments, the rideshare, which many of us are familiar. More and more of us got familiar with their delivery service, meals and even groceries. And then, of course, the freight that I described earlier. They're still striving to create profitability as a business. They're coming out of the pandemic. They had over 5 million driver couriers partners pre-pandemic. They're building that out. At the end of Q4, they're about 4.4 million drivers. On top of that, they have 29,300 employees in 72 countries. The question is, what is it you want your employees to understand as you think about your strategy, your goals, your metrics, etc.? What is it you want your customers to understand? How can using their services be of value to you as a consumer of their products or services? What do you need your shareholders to understand? You think about 12 years of not being net income profitable. Now they're starting to see profitability at some of their key operational profit metrics, but from a net profit margin, there was 1 year they were profitable in 2018 at a net profit margin, but most of that came from excuse me, my Siri's trying to wake up here. But most of that profitability came from the divestiture of assets. They sold off assets, which created a gain that came through on their income statement, showing them as profitable. Their core profitability just started to be profitable from an Ebitda or an operating profit measure just the last couple of quarters. So you got 12 years of shareholders saying, hey, when is this going to happen? Now, of course, they just went public in 2019. But what do I want my shareholders to truly understand about the company, what our goals are, what our objectives are, and how they should think about their business? And then, of course, their partners. Their business is 4.4 million rideshare drivers as well as couriers that provide the services for all of us who use them. That's what this activity is all about, is how can I help communicate? How can, as a CEO, get that information out? That's what these earnings calls are about. My guarantee to you is you engage around these. If you take the tool that I'm going to walk you through, if you will use it 2 to 3 times, my guarantee is that it'll build your credibility, your career, and company. You'll understand more about your business, more about your customer's business, or if it's just from a personal interest, you'll understand more about the companies you're interested in than most people will understand. In fact, in a sales role, as you start to talk with your clients, they'll say stuff like, hey, you seem to know more about, how come you know so much about our business, etc. All this information is available to us. So my guarantee is you use this, it's going to differentiate yourself in your role in your company. It's going to help you understand why things are happening in your business. And more importantly, what can you do to impact that? So that's what we want to try and do as I walk you through this tool today, is give you a resource. I'm going to give you a simple framework, a process, a simple framework, and 2 tools that will help you to assess any company's quarterly communication on an earnings call. So with that introduction in mind and my guarantee, let's go and jump into the process. 3 quick steps. You got to prepare for these, you got to analyze, and you got to apply. So the tool actually walks you through a section on each one of these. So let me walk you through that section. Again, you can access it at the end of our conversation later today. So let me start with the conversation, just a quick overview, what we call Earnings Call 101. As you think about Earnings Call 101, what are we talking about there? We're talking about the ability to understand what's going on in these calls. They happen on a quarterly basis. They typically are somewhere between about 40 minutes all the way up to an hour and a half. In fact, some are even longer than that. By far, the majority are somewhere around that kind of 45 minutes to an hour time frame is what you're looking at. They're broken up into 2 parts. The first part is going to be their prepared remarks. This is where the executives have an opportunity to communicate their strategy, communicate their performance, be able to describe what's worked, what didn't work, how we're adapting, etc. That's their chance to communicate. Then about somewhere between 20 minutes to a half hour into the call, assuming about an hour call, they switch and it's a Q&A. These are where analysts who work for these large investment firms, Wells Fargo, UBS, all these big investment firms, they have a chance to ask clarifying questions. They'll ask, what's really going on with that profitability? How quickly is that going to come? You said this, but it looks like this is what I'm seeing in your numbers. Can you help give me a little color as why those are may seem a little contradictory, etc. It's a great chance to be able to get access to that. Ed's asking, do all calls have Q&A? Ed, I hate to say all because I haven't listened to all, but usually on an annual basis, I listen to a few hundred of these. by far the majority of them will have calls available. Now, sometimes they'll kind of break it up in two sections. Well, you'll have a company, they'll do their communication. In fact, they'll even do it like as a video, their prepared remarks, and then the call itself will only be the Q&A. But by far, the majority of them do have, Ed, an opportunity for the Q&A. The challenge is that as a kind of a Brent Barclay investor, I don't get a chance to ask questions. It's going to be these analysts that ask questions. Great question there, Ed. So that's basically what they look at. About 45 minutes to an hour time frame is what you're looking at. So as you jump in this prepare phase, there's three things you need to do. The first thing you got to do is locate the call or transcript. Now, if it's before the call, let me give you a quick, simple way to access it. There's this great website. You may have heard of it. They call it Google. All you're going to do is type in what you're looking for. Uber. In fact, it's coming up right there. 2021 Q4 earnings. That's the quarter I want to look at. It's the information I'm going for. I type it in, hit enter, and I've got it there. Now, there's a whole process. You can go to the company's website. Every company who's publicly traded will have an investor relation page. You click on the investor relation page, and you just search for the quarterly reports. That being said, Google does a great job of taking you right there. Here's a little summary of it. Now, one of the things I like to look at is as you do this search on Google, they're going to look at both of what's on Uber's website, but they're also going to look at third-party groups like Motley Fool, Seeking Alpha, MSNBC, all these different groups who provide financial communication. They're going to have that information there as well. Now, if I'm looking at the company, I want to go to their website. That's where I'm going to get the most up-to-date, most accurate data or information. Now, I can also follow on with a third party, get a little more color, what analysts are saying about their stock, etc. But if I want to get the core information, I go right to the source, which is their website. There's a number of them that you look at. I'm going to come right down here because I want the specific Q4 stuff. I click on that. Boom, I'm there. Type it in, one click, you're there to what you're looking for. Now, if it's before the call has happened, you're going to have a link to a webcast. You click on the webcast and you're going to register for it. It'll give you a calendar invite where you put on your calendar, you're ready to go. If it's before the call, that's what you're going to want to do. Now, if it's after the call, you're going to see additional information here. So let me just quickly review. If the call's already happened, every one of these, or the majority of these companies, will record the call itself. So you click on it. Right here, it's already happened, and you're actually going to see, I've already registered. You come right here, you register for it, put your name in, etc., and it's going to actually go to the actual call, the recording itself. You can sit there and listen to it. You got the call right in front of you, ready to go. So if it's already happened, realize that it's already been recorded, it's available, you can just access. So you don't have to get up. Sometimes they're like, 8 a.m. Eastern time and you're on the West Coast, you want to get up that early? No worries, they're going to record it. Not only that, but many of them will have a transcript. Uber doesn't have a full transcript, but they do have their prepared remarks. Right here, this is the communication that their executive team provided on the call itself. So you can review exactly what they said. Now, if you don't see a full transcript, that's where you go back to that fancy website and you type in Uber. I can type and talk at the same time. 2021 earnings call, transcript. Click on there. And you'll see all these. So right here, Motley Fool is a website. Right here, I've got their call. That's word for word. Not just the prepared remarks, but you'll see eventually it gets down to this Q&A. Right here, I've got Q&A questions coming in. So the questions that analysts are asking. So you got Goldman Sachs, Eric Sheridan a question, etc. It's all right here for you. A couple other things I recommend you look for. Press release are always great. It gives you a nice summary of what's gone on. Also, before they actually submit their financial information to the Security Exchange Commission, once they get the press release, you will have their financials. They will be unaudited, but you'll at least have access. So here's their financial, here's their balance sheet, here's their income statement, etc. is all available. The last thing I look for is if they have supplemental information. I always check to see what that is. And what I'm typically looking for is a slide deck, a slide deck of their information. Here is Uber's slide deck. of what they talked about, and it breaks it out. It's a nice summary of it, gives you a little detail. Look what happened to mobility with all the variations of COVID, and you're starting to see growth. Remember, Omicron hit just earlier this year. Look at that big drop. You didn't see as much drop with some of the other variants, but when it got Omicron, you saw that significant drop in kind of gross ads that they had, et cetera, in their business. So it's a great little resource to see what they've communicated on their call itself. Well, folks, probably more than you ever wanted to know, but that's the first part of the prepare phase. How do I access it? If it's pre-call, I can do the quick search. I'm going to register for the call itself, and then I just join them when it happens. If it's post-call, it's all available on their website. Look for that webcast. Again, it'll be a recording. Look for a transcript. In addition to that, the other two things I look for is a press release and or a slide deck. Once you've accessed that, in preparation for the call, you want to review your notes from prior calls. Now, you might say, Brent, I've never listened to one. It's my first time. So you may not have the prior call information. You can do that same search, going back to Google. You can do that same search, and rather than look for Q4, look for Q3. And you can see what they said if you want to do that. Now, you might say, Brent, that's a lot of time. I don't have enough time to do that. That's okay. Don't worry about it. Now, as you start to complete the tool and you capture your information in the tool, every call as you move forward in the future quarters, you'll have the prior call information. So just going through the tool I'm going to give you will be the notes you'll review on the next call. The last thing I recommend from a preparation phase is you're getting ready to do the call. I highly recommend you do it with a team, colleagues, peers, direct reports. If you're a leader, bring your team together. If you're an individual contributor, either get with colleagues or go to your manager and say, hey, is there any way we can listen to this call together? I got some tools and we can walk together through them. It's a great way to get better insights around it, doing it with somebody else. So highly recommend that. Folks, that's the prepare phase. Pretty simple. Get access to it, review your notes in preparation for the next call, and then get a team together as you review that. The meat of the tool is the analysis phase. How do I take all that information and solidify it in little nuggets of information or actionable things I can do within my role in the company? That's what this is about. I want to give you a simple framework, what we call our 5-driver model: cash, profit, asset, growth, and people. We'll use that framework in the 2 tools that we have to assess both the strategic focus of your business as well as the financial performance. So many of you have been part of our courses as graduates to our courses. So I want to do a quick review for those that have never seen this. This is a simple framework that of 5 fundamental drivers every company focuses on. Those drivers are cash, profit, assets, growth, and people. Let me see if I can get my annotation tool out. Let me get that out here real quick. So these 5 mental drivers are the same drivers every company focuses on. Now, they might not have it in the same structure, but companies will talk about cash, profit, assets, growth, and people. Now, when people think of business or financial information, they're always thinking the financial statements. The foundation of our 5-driver model are the 3 financial statements. That being said, this framework is a simple tool to be able to assess what's going on in a business. Be able to listen to these calls and say, what are they talking about? Is it cash? Is it profit? Is it assets, growth, or people? What are the key metrics around each of these drivers? How are they performing? How are they driving towards them? So what I want to do is just take a couple minutes. I want to review the 5-driver model so everybody can see this framework and how they might use it in the tools that I'm going to describe in just a moment. So in the chat box, when we talk about cash, for those that have been, if you haven't been, go ahead, take a stab at it. No worries. When we talk about cash, we talk about cash is vitally important in business. In fact, there's a quote, a famous quote, cash is blank. How would you fill that out? Cash is blank as you think about a company. Julie says king, absolutely. Sometimes queen, royalty. Some will say it's the lifeblood of a business. It's the oxygen. There you go, Brooklyn. Oxygen supply of a business. It's vitally important. In fact, the number one reason businesses fail is they run out of cash. You think about during COVID, companies that really struggled. Oil and gas in basically Q2 of 2020, oil price went into negative territory, the first time it ever went. Meaning for every barrel of oil, instead of a fee, they were paying you to take a barrel. They didn't have places to put it. Companies that didn't have cash in the oil industry went out of business. A company like Chesapeake Energy went into bankruptcy, could not survive because they didn't have cash position. Versus companies that had tremendous cash or they started to see huge growth in their business, they thrived during COVID. Companies like all of your online retailers, your Alibabas, your Amazons, these delivery, Uber Eats, DoorDash, all these companies saw huge growth in what they're doing, had plenty of cash to drive their business. but cash is vitally important. It's a key driver of every company, and you want to look at what is the company saying around their cash. If they have plenty of cash, you won't hear them talk a lot about it. If they're struggling with cash, you'll see more information around that. As you look at the metrics they look at, two key metrics around cash. One is their cash position. How much cash do they have kind of on hand versus how much cash do they generate, what they call cash flow. Profitability, on their other hand, is basically the revenue they bring in minus the expense going out equals their profitability. So when you think about profitability, that's what we're looking at. Now, when you talk about profitability, some terms you want to make sure you're aware of. Number one is profit is the same thing, or is the same thing as earnings, which also is the same thing as income. So these are all synonymous terms. Don't get confused by the terms. Other terms you'll hear kind of synonymously are sales is the same thing as revenue, which is also known as your top line in most cases. These are three terms you'll hear executives talk about. Now, from a profitability metric, they'll talk about what they call gross profit. Gross profit represents revenue minus your direct costs of providing your product or services. If a company's looking at gross profit, they're trying to say how profitable is that product itself. The next line you get is what they call operating profit. By the way, it's also known as EBIT. For extra credit points, put in the chat box, what does EBIT stand for? Operating profit is also known as EBIT. When a company looks at operating profit, they're saying, what does our core business do? Let's look at our core business. How profitable were we from our core business? Looks like Christina had it. A few of you had it. It's earnings before interest and tax. Absolutely so it's earnings before you take out the interest expense on your debt and the taxes as a corporation. You think about the core business. Uber is not focused on their tax obligation. They have a team that tries to mitigate their tax, but their core business is not about taxes, nor is it about getting access to debt. They're not a bank dealing with all, yet there's a whole part of their business that focuses on it. Their core business is not about that. So let's clean off those things that it's not core to them and say how profitable are they from their core business. Now, the key metric they look at, if you've looked at them, is EBIT has two additional letters, DA, Ebitda. Ebitda stands for earnings before you take out interest expense, taxes, then depreciation and amortization. That's their key metric that they're driving towards. So these top two drivers are kind of outcomes of the next three. So assets, I have assets to deploy to be able to drive my profitability, my cash flow as a company. And you're thinking about really about how financially strong is the company versus how much do they deploy their strength, their cash, for example, deploy their assets, borrow against their assets to be able to fund growth, to utilize those assets to create greater cash and greater profitability. The two terms you'll hear them talk about is what they call asset strength or asset utilization. What do I have? And then how do I utilize what I have to create greater profitability? Then finally, growth is what investors expect. It's a driver of any publicly traded company. That's how the market's focused. And of course, people are the center of the model. We would suggest in our 20 years of experience working with many of the greatest companies in the globe that people are core of any business. That external customer who uses your product or service, but also internally, how well do you get from an execution perspective? That's what this 5-driver model focuses on. So folks, that's the 5-driver model. Now, if you want a deeper dive on that, at the end of this, we're going to give you access to an online self-paced program. You can go ahead and jump in at a discounted rate and be able to understand this in greater detail. If you have colleagues, peers, you got a team of people, you want us to come in and help you understand these 5 drivers through the lens of your business. At the end, there's a place, jump on, reach out to us. We're happy to share how to approach this topic. Whether you choose to use us or not, we'll give you some ideas on how to approach that. Love to work with you and your team. Well, this framework now becomes a foundation of how I can listen to these calls and capture what are they focused on? What's their strategy? How are they performing from a financial perspective, et cetera? So that's what I want to do. I want to jump into the tools itself. So the first tool we have in this, in our analyze section, is what we call the executive alignment tool. It's all about how do I use the 5-driver model to assess the strategic focus of the company. Here's how it works. Every time they say something about cash, I put a little slash mark. Every time they say something about profit, little slash mark, assets, growth, and people. Over time, as you go through a whole call, you're going to start to see these numbers start to add up, etc. Once you're done with that, you then answer 4 simple questions. The 4 simple questions are over here. Which business drivers seem to get the most attention? I love the second part of it. Why? What is impacting their business? For example, the pandemic had tremendous impact on Uber. So That's why they're talking about it. Profitability. They haven't been profitable for 13 years. So why are they talking about profitability? Because analysts and investors are saying, hey, when is this going to become profitable, et cetera? What are the 2 or 3 main points the executive's trying to make? What are the goals and objectives going forward? And then because it's a publicly traded, because it's an earnings call, what are the questions the analysts are asking? Now, as you look at this, I don't want you to get too concerned about it's not an exact science, but as you go through that, if you're new to me and you're saying, Brent, wait a second, I don't know much about cash. Don't worry. I give you a little definition. Here's what we mean by cash. Not only that, I give you what I call my trigger words or examples. If I hear anything about dividends, distribution, stock buyback, debt, etc., if I don't know what they are, type into Google, can get a quick definition of what they are. But those are all trigger words. That means they're talking about cash. If I'm seeing stuff around EBIT or Ebitda, pricing, revenue, sales, cost, that's all profitability. So you don't have to be an expert. Right here, I tell you both the definition as well as some examples to look at. And again, then you take those, once you've completed that, listen to the call, mark it all up, then answer those 4 simple questions. Which business driver seems to get the most attention and why? What are the 2 or 3 main points the executive is trying to make? What are the goals and trends and objectives going forward? And what are the key questions the analyst communities or concerns were raised by the analyst community? Now, in addition to that, look at it after the call. What's happened to their stock price? What are analysts start? Go back into it. See what they say on these third-party websites. Great information available to you. Well, folks, we don't have enough time to go through the whole call, to listen to a 45-minute call. Theirs is on the shorter end at 45 minutes and complete this. So I've kind of done it for you, but there's little pieces I want you to join me in, and let's give you a chance to practice doing this so that when you go and listen to your company's call or whatever company you're looking at, you're more comfortable on how to use this tool. So what I've got here is I've got 3 quotes. One's from their CEO, got one from their CFO, and I got one from the analyst. So let's kind of walk through. Here's what I want you to do. Open your chat box if it's not open. And my goal here is for you to tell me which of the 5 drivers are they focusing on, okay? Everybody jump in on this. Here we go. The first, I got 2 paragraphs from their CEO, and he says, we had a strong quarter to close out 2021 on a high note. Our results continue to demonstrate both how eager people are to move around their cities as restrictions ease up, and how delivery has become an important day or an important part of their daily lives. That first paragraph, what are you seeing in there? Looks like some of you are already putting them in. Thank you for joining us there. Looks like we're getting growth there. People, yeah, definitely right here. It says it right here. How eager people are to move around their cities. Of course, growth. They're starting to see growth. This one's interesting. Delivery has become part of their day-to-day. In the chat box, give me a thumbs up, or just how many of you are using Uber Eats or DoorDash, all these resources that prior pandemic, a few of us were using, but how it kind of changed the way we're shopping. How many of you are getting your groceries delivered to you? That's a whole new approach, etc. It's interesting to see how that's ramped up over the last couple of years for sure. Excellent. Let's go to the next paragraph here. We have gross bookings. Now, gross bookings is a unique term. Let me quickly give you a high level. Gross bookings includes all the revenue. Think of this almost like a gross revenue or gross sales. Total revenue that came in for their services, 25,900 million. They then net out their driver's fees, all their insurance fees, their various kind of, airport fees, et cetera. They net all that out before they get to their revenue number. But so they kind of use this gross bookings and then a revenue number, 2 separate numbers. The gross bookings is going to be much greater than the revenue number. But think of it as kind of like a revenue or sales number. So gross bookings were 25.9 billion, came at the high end of our guidance. So they outperformed what they said they would do in the market. Then the MAPCs, what the flip is that? Monthly average platform consumers. This is how many people in a monthly period of time used their services at least once. 118 million for every month. 118 million people use their services. Reached an all-time high. So which drivers are you looking at there? Just in this sentence right here. You got gross bookings. You got this MAPCs, reached an all-time high. What are we talking about? Definitely profitability. As you talk about, that's growth and profitability. Absolutely, that's strong. This one right here, what would you do the MAPCs at? Yeah, definitely people. Thank you, Ed. It's kind of a people metric for sure right there. So definitely people, profitability, growth, absolutely involved in this quote here. The last sentence, continued strong execution of adjusted EBITDA, nicely above our guidance. What did we say EBITDA was? That should be a trigger word for you for one of the drivers for sure. Which drivers do you see in there in that last sentence there? Yes, profitability. Ebitda is a profitability. Anytime you hear Ebitda, that's going to be a profit driver for sure for them. Their team, you can weave in people a little bit there possibly. Now, one of the things I want to just give you a caveat as you use this. If you and I were in the same room and we go through this exercise, you and I are not going to get the exact same number of slashes. It is not an exact science. That being said, we do on average about 1,000 of these sessions every single year with our clients. And invariably, the top 2 to 3 drivers will always be at the top, meaning you and I would see that profitability is going to be towards the top, and we're going to also see growth towards the top based upon what we review in these documents. That's what we find. So the goal is just to get kind of a balance. What are they talking about? It seems to be growth and profitability. So why are they talking about that? That would be the next step. Well, here we go. We got another one real quick. This is from their CFO. Mr. Shea, I'll let you review. What do you see? Put it in the chat box. What do you see? Let you read it on your own. Just put in the chat box. What are you seeing here? Danielle's asked the question. Oh, looks like Ed answered it for us. Thank you, Ed. Danielle was asking the question, what's the DNA on Ebitda? It's depreciation amortization, as Ed kind of described. Great help there. Okay, so we're seeing profitability, growth there, assets. You should start seeing the theme. Just kind of scroll up and down on your chat box. You see kind of a theme of what we're seeing here. A lot of growth, a lot of profitability, assets there, a lot of people kind of coming out. Of course, as you look at that, you got Ebitda right there with profitability, gross bookings, strong quarter of gross bookings might get us bookings again. It's going to be profitability, margin. Anytime you hear margin, I'm thinking profitability. Growth right there. The moment they say grow or grew, any sort of things like that. Of course, margins. So a lot of profitability, a lot of growth as you look at that. But not only that, you'll look at here's one of the analyst questions. You start to see similarity in their conversations. You see stuff like one of their questions is around drivers. Basically during COVID, a lot of people quit driving. There wasn't an opportunity to do that. People didn't have the ability to make money doing it, so they lost some of their drivership. Well, now it's all about getting that restarted. Much like most of the economy, you shut it all down, you got to resurrect it, got to get it back up and running. And it takes time to do that. So drivers would be people. Obviously, driver impacts the growth. Of course, pricing, we're starting to see profitability here. It sounds like a big effort on improving the driver onboarding flow. So trying to build their supply of drivers. I guess beyond the beginning of the year period where maybe a driver can only drive for delivery, are you seeing a big uptick percent of drivers that drive both delivery and mobility? That starts to deal with like asset utilization. Think about before, if I got driver, you got a driver who does rideshare, but you also have a driver who can do delivery. Now all of a sudden you got a driver who can do either. That allows them more resources to use as we ask for the services, reducing time before you get that service, make it more efficient, reduce cost, et cetera, that allows value for the consumers. Well, folks, that's how it works. Very simply, you look at what's communicated, which of the 5 drivers are they talking about, and address that. Well, obviously, we could spend another hour going through the call itself, but I did it for you. So let me give you what I saw. What did I see in the numbers? Here's how I break them out. Now, you don't have to do it this way. The tool that you're going to get, I like to break it by prepared remarks versus analysts. What I'm looking at there is where's consistency, where is congruency. That being said, you may just want to do the slash marks, however you want to do it, no worries. So, of course, the big winners are the ones that they have the greatest focus. You see right here is growth and a lot around profitability. Got a very close one as well down here with people. Not to say that these two are not important, but definitely these two seem to be the greatest focus that I saw in listening to those calls. So the questions are then, which business drivers seem to get the most attention and why? What were the 2 or 3 main points, et cetera? So I'm going to walk you through that from my perspective. What did I see? Now, if you happen to have listened to their call, you want to add to it, go ahead and put it in the chat box. But let me start with which of the 5 drivers seem to get the most attention and why? Let me start with Growth, definitely. We saw 57 examples that I saw. Could be more, could be less, but definitely a key focus. So why is that? Well, they're coming out of the pandemic, and part of that pandemic is that rebuilding their drivers for mobility as restrictions have lifted. They are seeing more demand for all their services. So basically, again, you think about why are we seeing inflation? Why are we struggling? You shut the whole economic engine down. And now you've laid people off in many cases. How do you get that all back up and running? That's a big focus. And as you're coming out of pandemic, you saw Uber Eats skyrocketing. You saw rideshare drop, and now you're starting to come out. You're starting to see improvement on those. So a lot of conversation around why are we growing? How are we growing? How are we increasing our supply of drivers, couriers, et cetera? So kind of the second bullet here is much like the whole economy, they must get their systems and process back up and running, especially mobility, a lot of conversation around drivers, et cetera. You can see this. And what I love about the webinars is when they do a slide, I can't get this. I wouldn't have been able to produce this. What a great slide that kind of shows what's happening from a growth perspective. You've got kind of since the pandemic, somewhere in right about here is where you see the pandemic, and you see this huge drop. Of course, we would expect that, right? Rideshare, people aren't traveling, all that changed. We're not going outside. We're not going anywhere. Then you start to see, but notice what you see as far as Uber Eats. Look at that trend on Uber Eats. Nice growth through it. So this is an example of a service that you saw some real nice growth to versus a service. Oops, let me go back here. A service that you see this huge drop and now trying to rebuild. You look at where they're at. They're not even where they were back in February of 2020. But you're seeing kind of what happened from that growth. It's a great example of mobility rapidly recovered from Omicron impacts, delivery increases as an ingrained habit. People are starting to use it as a greater service. So why growth? Another example, delivery has significant growth over the past. You saw that in that previous slide. In 2021, they increased by 109%. At the same time, their rideshare decreased by 46%. Put your CEO hat. What's the value of that? Well, that diversification of products allows them. They have one product drop dramatically. You think about maybe like those that only had the rideshare. Boy, you see huge drop. They're still trying to build them, get out of that hole they're in. Whereas you have another product that saw nice growth. So that really helped them from kind of a balancing perspective. You don't see as big as a hit as you might see from some of their competitors. Starting to see recovery, yet have had to build out their drivers. 325,000 people started to work for Uber in Q4 of last year. Guys, that's more than most companies in the world, total employee base. Tremendous growth there. Of course, so why growth? They're having to get all that back up and running. They're hiring more people. Gross bookings are up as people come back to mobility, delivery, and freight. You see some of those. This was the monthly average platform consumers. Just think of that as monthly users. How many people used it at least once per quarter? So 118 million people used it at least once in this quarter. Increase of 27% of their MAPCs. I don't know how they say that, MAPCs. Trip growth, you see a nice improvement in that as well, 23% up. So the second metric I saw a lot around was profitability. Why profitability? Well, having heard what I've said thus far, any guesses to why profitability would be a focus of Uber? You may know them well enough to speak to that. You see my slide deck. Well, if you haven't been profitable in the 10 years you've been here from your core operations, that's a problem. So they haven't been profitable. They're trying to kind of get out of that. A lot of questions around. They did their IPO in 2019, just before the pandemic. Their stock price is down about 30% lower than their IP price. Their IP price was about $40 a share. Today, they're about $33 a share. So why is profitability important to them? The market's saying, hey, when is this going to really start to pay off? Now, on their key profitability metrics, the last 2 quarters of this year, of 2019, they started to see improvement of that. They started to see what they call their operating profit, or the Ebitda profitability has been profitable. So they kind of spoke to that. So a lot of scrutiny from investors around profitability. That's why they're talking about it. Why? Because they haven't been profitable. Here's the example. So the last 2 quarters, they saw profitability as a company on what's called adjusted EBITDA. It's not net profit. It's a form of their operating profit, their controllable profit, and they're seeing some real value, up $440 million from where they were a $500 million loss in that quarter. You look at their delivery section, which is one of their newer sections. This last quarter was the first time they saw profitability there as well. small profitability, but they expect to see that. So the idea is think of them a little bit like a new business. You actually have more going out than you have coming in as you're starting up that business. And so the fact that they're starting to see profitability is seen as going to start to be a positive metric for them, leading in metric to the future potential of that growth. So that's a big focus of what they're talking about. And it's all about they haven't been profitable. So two drivers they focused on. It was growth and profitability. So what are the 2 or 3 main points that was made in the call? From my perspective, there's kind of 3 of them I highlight here. Number 1, Q4 was a strong quarter in all dimensions with solid gross bookings. Remember, that's kind of their big revenue sales number. They then take out the driver's expense and get to their revenue number. Adjusted Ebitda margin, their profitability was 5.5% of gross bookings. Here's some of the examples of how they, again, why I love these slides. Every single segment of their business, they kind of speak to how they performed and why that quarter was positive. So you have quarter over quarter improvements in gross bookings right here. So in Q3, they had $9.8 billion of gross booking. They had $11.3 billion. Not only that, this is kind of an interesting metric. If you're not familiar with that, it's their rate take. So what percentage of the booking are they actually collecting as their revenue? About 20%. You look at what happened. Look at this back in COVID when that dropped. They went from 21% of the take down to 12.6%, and they've seen some nice improvement. Now, a bit of the reason they're down on this, and a bit of the reason this isn't their adjusted EBITDA as a percentage of revenue is lower right here, why this is a little bit lower, is because they're incentivizing, trying to build out their infrastructure. They're actually paying more to drivers, couriers, to join them to get it up, get the system back up and running. So that's why you're seeing a little bit of decrease on the take there. So that's mobility. Here's what they say around delivery. Revenue growth, significant growth from a revenue perspective. Here they were versus a year ago, starting to see some momentum around there. And of course, a lot of that has to do with us getting more and more comfortable with Uber Eats, that delivery system that brings our groceries, brings food, etc. Of course, then their freight had some huge growth in Q4 of last year. It's an interesting model. If you want to research it, check into it. It's really quite interesting. Small to medium business services around freight and transportation. Really quite interesting technology they have available. So that was the first bullet. Second bullet, look back on 2020, we had a great year. And this is from their CEO. I can't say it went exactly as I predicted, but our teams have shown an incredible ability to remain agile and manage through changes effectively. Despite COVID and all of its unpredictability, we now have reported our second adjusted EBITDA profitable quarter. That's a huge metric. Keep watching that. See how they do in Q1 of this year. See if it's continued to be successful. Uber is emerging from the pandemic even stronger. So the third message or key message, Uber is emerging from the pandemic stronger than ever, well-positioned to deliver strong profitability, growth, and significant expansion in profitability and cash flow generation over the coming quarters and years. If there's any kind of boil it down, simple message, how many places are they talking about profitability? Everything is around profitability. Big emphasis. If you were to boil it down, we're moving to profitability. After 12 years of being in business, we're in a position to move to profitability, and that's a big emphasis of what analysts are asking about. So goals and objectives, again, it's going to hit a lot of what I've already talked about. Q1 seasonality, so they give some very specific data on the first quarter of this year. Basically, because of the Omicron, they're seeing a $1.1 billion gross booking drag. So it'll be lower because of Omicron by $1.1 billion. Despite that, though, we still feel like we're going to be able to expand our profitability. And specifically for the full year, here's some of their goals. Incremental Ebitda. So each of these segments, what are we going to see? About 10% incremental Ebitda from mobility. So 10% of whatever their revenue is will be mobility profit, and then greater than 5% on their delivery segment. And they expect their freight positive adjusted EBITDA. So it'll be positive profitability throughout the whole year. So that's a key focus of what they focus on. So now what do I know about them? Well, I know a big focus on profitability. the strategy around getting their markets up, the differentiation between three different portions of a business, a delivery business, a mobility business, as well as a freight business, and the ins and outs, puts and takes of what they're trying to accomplish. Well, what did the analysts try and question them on? The last part is what they focus on. A lot of what we talk about, again, profitability, profitability, profitability. When, how, what's your margins going to look like, etc. Great question, Sydney. I'll come right back to your question. And Brooklyn, we got freight and trucking as well. We'll hit both of those. Let me get these bullets out here real quick. So drivers and couriers, that's a lot of questions on drivers, couriers. You're about 4.4. You're 5 million before pre-pandemic. Remember, some of that, to get more drivers, they're actually taking less of the gross bookings, giving more to the driver to be able to then get people who want to stick with them a little bit longer. So that's a big focus of their analyst conversations. We got a big focus around competition, regulation, legal challenges. The UK, for example, their licensing renewal comes up. Anybody's in the UK or ever traveled in the UK, for years, you couldn't get an Uber off of the airport there. They had some union and other issues. They tried to prevent them from doing that. But they want to renew their UK license. They have some challenges in California. They're trying to figure out, et cetera, about their role, whether or not those that drive are employees of them, or they're just the group that makes the connection, et cetera. So let me go back to but those are the types of questions that you saw. That is the tool. That's how you fill it out. That's how we look at it. Let me go back to your questions. A question about adjusted EBITDA versus EBITDA. What is the difference? Ebitda would just be a basic calculation. Go into your income statement, take your operating income, and then you add back your depreciation and amortization expense. If they adjust it, what they're going to do is they're going to look at quarter over quarter, one-time unique factors that may have impacted their business. For example, let's say in the UK licensing agreement, they had to pay some big fee. Well, that's not a core operating metric. So they're going to take that out. It's not a every year metric. They're trying to make quarter over quarter comparison as exact as they can. So they'll adjust out any unique factors and they'll say that's our profitability metric. So let me know if that, anytime you hear adjusted, all they're going to do is take the standard metric. They're going to adjust out any unique things. Brooklyn's question around freight. What is that? What's literally small to medium business transporting rather than having to invest in a freight group, it's a technology that allows them to access freight resources. So let's say I'm a small manufacturer of desks, and I do it out of my garage, right? Maybe I want to access some of those resources, and I can actually get part of those resources through technology, much like you would do as a rideshare. Here's what I need. Here's what I need it delivered, and they'll give you a price, and you can determine whether or not you use it. So there's a technology around it, but it connects it's a peer-to-peer as well. Small to medium businesses to distribution groups, freight groups that will help them get that delivery. Great questions there. Okay. Well, summation, what do I know? Profitability is key. 3 segments that are all starting to resurrect. Got to get more drivers to help provide the services that they're looking at. So I got some clarity, strategy around profitability, success and growth, a growth-focused area. Well, now I want to look at the numbers, see what's going on there. So let me give you the next tool, which is their financial tool. It's called the Navigating the Financial. Here's how it works. On the left-hand side, you see the 5 drivers: cash, profit, asset growth, and people. Next to them, you have the key metrics every company focuses on. Now, these are standard metrics. You may have specifics. Each industry will have their own, but these are the standard ones. The genius of it, it tells you where in the financial statements to go to access the tool. Then you can do the calculation. Now, you can look at the current period versus a comparison period. That could be quarter over quarter, year over year. It could also be a comparison one company to another, et cetera. So here's what I want to do. Open your chat box. Help me fill out. We're just going to do a few of them, and then we'll wrap up this tool here. So here's what I want to look for. We got to get Uber Technologies cash and cash equivalent number. How much cash did they have on at the end of 2021? So based on my tool, what statement, put in the chat box if you would, what statement do I need to go to find that number? Put in the chat box. Just want to see if you can see how to use this tool. There you go, balance sheet. So none of you have the balance sheet. You may have it. If you do, find it. If not, I've got the balance sheet. I'm looking for cash and cash equivalent. Now, if those of you have been in my course, you'll remember that we start with most liquid down to least liquid. So cash is going to be probably towards the top. So see if you can find it. Now, there's a little bit, you got to watch the years. They do it a little different than most companies. Most companies have the most recent here and the prior year here, but they've actually flopped it. So here's the year I want to look for. How much cash do they have on hand? at the end of December 31st, 2021, put it in my chat box if you would. Ed, you've got the prior year. That was their cash position. There you go. And Brooklyn puts all the zeros as well. Yeah, that's not 4,295. That's 4,295. If you look at where they were a year ago, you see they spent some of that. Not only that, but this short term, if you look at their executive, they'll count these two numbers as their cash position. Notice how much cash they've used last year in 2021 to grow and expand their business. So I plugged that over. I got my number, 4,295. Next one I want to get is going to be my cash flow. I'm looking for cash flow from operations. What statement do I need to access to get that based on my tool? Put in the chat box. It's the last time I'll pick on you on that. Just want to make sure we're comfortable. Use it. Thank you, Ed, Steve, Daniela. Thank you. Yeah, we want to get that cash flow. So here it is. Now I'm looking for net cash provided by operating activities or net cash used in operating activities. You got cash flow from operations up here, but all this is a reporting of it. I got to get to my net cash. So anybody, it's right here. Now again, look at the years. Don't get confused on the years. They do them backwards to what you might be used to. They generated, so it's a negative number. Now, do we want that number to be positive or negative? A negative number on this means cash going out. Positive number means cash coming or generated. So yes, they have not been cash flow positive. This is why you kind of look at them like a startup. Meaning I don't have the amount of cash I'm bringing in, the amount of profitability I'm bringing in is not covering the cash that's going out. That's what you're seeing. Now you are seeing improvement year over year. 2019, they were at $4.3 billion use of cash, not a generation of cash, jumps up to 2.7. Now we're down to 4.5. That would be a quick one to look at in the next quarter. Do you start to see that becoming positive? Well, there's the number. So the income statement, and we're going to look for the revenue. You see it right here, the 17.45. You plug that in. I now got to get my net income. Again, I'm going to that income statement. Come down right here. It's a negative number. What does that tell us? Is it a profit or is it a loss? Yes, Keisha, a big improvement from 2020 to 21. Absolutely. Got a loss. Not what we want to see, but we know why. I do the calculations to get my net margin. Here's what I got. For every $100 they brought in revenue, they generated a loss of $2.90. The question is how quickly can that improve? That's what they're looking for. That's that whole profitability conversation. Well, folks, you could go through the rest of it and do it on your own. I don't have time to go through every single one of these. And if you have questions, what are they? Just do a quick Google search. What is equity ratio? You have our information. Reach out to us. We'll help you work through it if you have questions. But here I got Uber for full year 2021. I got it a year prior. What stands out? Well, their cash generation is getting better, even though it's still negative. I'm also seeing margins improve. I'm seeing growth in metrics, even though they're still negative. I'm starting to see improvement, and that's what they want to look at. You could also do this on a quarterly basis, see if a quarter is getting better or not. In addition to that, you have the opportunity to look at, you can look at a competitor. You can also look at any company. Those that joined us last month, we looked at Meta platforms or what we call Facebook, right? Facebook is what we looked at last month, and here's their numbers to compare. So you're seeing a well-established technology company versus a peer-to-peer company that's just kind of getting its legs under them. That's hard to say getting their legs under them as you look at how many people use them, but working towards that profitability cash flow. So I can see what's going on in their numbers. Now I have a good understanding of their strategies, their direction, et cetera. I also understand their financial performance. Well, every $100 revenue, they generated $60. Yeah, that's right, Ed. For every $100 they generated last year, they generated a loss. 2020, they generated a loss. Well, folks, the last part is about application. How do we apply this? If you get to this point, you say, oh, that's interesting. You do nothing with it. I've wasted your time. The real goal is to do something with it. We have had a chance to work with many great companies here at Acumen Learning. And the core focus we're focusing on is get behavior change. Do something with it. In our experience working for 30 of the Fortune 50, here's some of the results that our company customers say they get from doing this type of experience, going through the earnings call, applying it. They improve their business performance and their business, improve the performance of your business as well as your function. They increase the collaboration by doing this. Understand what your company is doing, why it's doing it, how you can impact. And they improve their upward communication, their ability to converse with executives, improve employee engagement, increase business focus, as well as improve team strategy. That's what you got to take this information and use it in these ways. That's the goal of everything we do here at Acumen Learning. So to know and not to do is not to know. Here's the things that I saw. And the last part of the tool is what were my key insights? Their unique model. It was my first time looking at a peer-to-peer in this detail. Very interesting to see how they look at that. They have this whole thing. I highly recommend. Look at Car Next Door, an acquisition. This is basically where you can get rid of your car. And you're just, it's an Uber type experience to access the use of a vehicle. COVID impact, that was huge to see what happened. While their rideshare is dropping, they saw their delivery increase and how that helped them to stay viable. Still striving to profitability. And I was also surprised that their operating costs are still so high. They got to kind of figure that out to generate greater profitability in the business. Once you see your key insights, what stands out to you, then you say, based upon what you learn, what is it you can do with this? I'm a consultant. I want to look at their performance against Lyft and other competitors. I want to also share this with my consultants, my clients and customers. What's going on in the peer-to-peer market, how they got impacted by COVID. Of course, we'd love the chance to work with Uber Technology someday. We don't currently work with them. How can we help their employees understand how they can reduce costs and increase greater profitability in their business? Love the chance. If you're part of Uber, give us a call. I want to be part of that. The last step of the tool is to then go have a conversation. If I analyze my own company, I'm going to go talk to my boss. How can we impact our business? If I'm looking at a customer or a partner, how can I impact their business? Talk with those within your organization, your sales organization. How can we differentiate ourselves, et cetera? If I want to look at from a benchmark or competitor company, talk with your manager how you can impact the business. Well, folks, that is the tool. So my question to you is, which company are you going to analyze? You look, as you do this, these notes become part of what you focus on. As you do this activity on a quarterly basis, you have the notes. All you have to do is pull that up on the next quarter. You're ready to go as you listen to that next call. So my question to you, put in the chat box, who are you going to analyze? To know and not to do is not to know. It's going to be a company you're going to work for, somebody you sell to, somebody you compete against, a partner, invest with, interested in, or next month we're looking at Target. Put in the chat box, who are you gonna analyze? I'd love to see who we're analyzing next month. Invest in, employer, where I work for, absolutely. Anybody from sales, if you're in sales, look for somebody you're looking to sell into. It's a great resource to differentiate yourself. Well, folks, there's only one thing I have to do as we wrap up today, and that's to give you access to the tool. Here it is. If you go to Acumen Learning /webinar, you get access to our workbook, the tool that I just given you. Please go in there. You can also give us feedback on what you liked, as well as share potential companies you think we should look at. Sign up for our next activity. We're going to look at, on April 27th, we're going to be looking at Target, or as I like to say, Target, the high-end version of a department store. Target, we'll be looking at them. If you're somebody who wants a deeper dive, we've got our online award-winning program, $100 off, you can access that. If you're somebody who says, no, Brent, I want even more. I want to understand that through the lens of my business. Go to our website and reach out to us. We'd love to share how we've done this with 30 of the Fortune 50, many of the Fortune 500, and really move the needle around business and financial acumen. With that being said, it's truly been my pleasure. Thank you so much for your time. Great questions today, a lot of good conversations. We'll stay on. If there's any additional questions, happy to answer them. Otherwise, make sure you access the workbook, sign up for our next session, or jump into that online tool. Thank you for your time and have a great day. Thanks, Ed. Great engagement. Appreciate your help on that. Thank you. Again, if you want to access that, did we put that in the chat box? Let's make sure we get that in there so it's an easy link for anybody who wants to access that. Somebody can get that in for me. Thank you. That's the link. Will get you access to the workbook, as well as register for our next session. Love to have you join us. acumenlearning.com/webinar. Thank you, Travis. Good to have you with us. Lenny, Greg, thanks. Monica, Angelique, thank you. Everybody who joined us. We'll stay on for a few minutes. If you have any additional questions, happy to answer. Very interesting company. Interesting as you look at some of their legal challenges with whether or not the driver or the courier is an employee of Uber. That's a big part of the legal issues they're dealing with, and how they set up their business around that. They really consider themselves a connector, right? They're connecting the consumer with the supplier. and much like a Visa or an Amazon, or excuse me, or a MasterCard, where they connect a buyer and a seller together. They kind of see themselves that way. So they don't see the 4.4 million drivers as their employees. They see it as kind of contracted work, and all they're doing is their service is the technology that connects the two groups, which is kind of interesting model. Similar to an Airbnb, your DoorDashes, those kind of peer-to-peer groups. Very interesting. Makes you wonder, what is the next peer-to-peer opportunity going to be? Figure that one out. That would be a great new opportunity. Now, careful how you share it here. Somebody might take your idea. Well, folks, I'm not getting any questions. Our team, do we have any questions I missed throughout the call? I think I caught many of them. If there's any that I missed, let me know. Otherwise, we're going to wrap up here, folks. Again, just go to acumenlearning.com/webinar to access the tool, sign up for our next session, etc. Thank you. Put that in there. Ed asked another question. Where's the other question? Ed, did I miss one of your questions? I answered a few of Ed's questions. Steve, maybe help me if there's a question I missed. Put it in the chat box if I missed something here. Same as the bottom line. Profit earnings. Yeah, that was a question. So profit earnings and bottom line. Yes, profit earnings income and the bottom line are often the same thing as well. Yeah, so Ed, if that was your question, yeah, profit earnings and income and the bottom line are referred to. So it's your net profit, net earnings, net income, and the bottom line are all the same thing. Great question, Ed. Oh, I see it there. Sorry, I missed it. Ed, you've had some great questions. Thanks for joining us. Bring some colleagues next time. Help us continue to influence the world one person at a time around earnings calls. I kind of get geeked up about it. I'm honest here. So, well, folks, anybody else see anything we missed? Well, let me give you a quick wrap up. Thank you for your time again. We do these every month. Please join us. Love to talk to your companies if you're interested in this topic, how to take this. We can do an earnings call for your company where we look at what you're talking about, what's going on in your industry, et cetera. We can also help individuals understand your business model better by doing our courses. We got self-paced online. We've got virtual courses. We do face-to-face. Love to talk with you. Got a great sales team ready to talk and answer any questions you might be, even just to share insights, our best practices that you may want to use. Even if you're not in the market, love to be a part of that and influence the world around this business and financial acumen topic. Folks, thank you very much for your time. Have a great day. Let's go ahead and close it out. Thanks, folks.